Najprej vsem dober tek za zajtrk. In moram priznati, da nisem pričakoval, da mi boste pripravili Tino Maze kot pretekmovalko na tem eventu. Tako da benchmark ste postavili relativno visok. Kot pa razumem, je ta dogodek v angleščini, tako da jaz potem predlagam, da pridemo na angleščino. And maybe just a few words to explain how I spent my time in the government, what were the key things on my mind, key concerns, and also the things that really we need to push forward. Let me start at something that's maybe obvious, but sometimes we forget in shaping our economic policy. That Slovenia is a small open economy. It's extremely dependent on its environment. We export 70% of what we produced, and we import 70% of what we consume. This means that Slovenia needs to be linked to international environment significantly, and that we cannot really make an economic policy that would make a breakthrough through the growth on a sustainable basis on a long term just by pushing up the domestic demand. The second thing I would like to stress is that Slovenia is stuck in recession for the last 5 years. There are two key problems behind. One is the indebtedness that was started in the private sector, that we are now socializing and transforming into the public sector. And the second thing is the rigidities. Rigidities in the labor market, rigidities in the ownership structures, rigidities in whatever we can basically think. We have plenty of rigidities that basically does not permit us to change things and to move things as quickly as we want. But if you want to adjust to the new reality of what happened during the last 5 years, we need to change. So what we need to do, it's basically to debug the over-indebtedness. We need to break the rigidities, and that were basically the key elements that really shaped the decisions and the economic policy and priorities that we have put. I spent my time, I would say 95% of my time with priorities. First one, it's about how to make the Slovenian business environment can profit from the low interest rates in Europe, because we have a single European environment. We are in the Eurozone, we have the single monetary policy, the single euro, but the monetary policy stance in Slovenia is much higher than in the rest of the Europe. First, we have banks that are not able to borrow internationally and lend domestically at the low normal rates. And second, we have corporates that are over-indebtedness and they are not able to receive loans in order to invest it in a new business, go for investment, go for new markets, go for new clients and develop a new products. So this is, by my opinion, the element that is the most stopping and blocking the growth in Slovenia. If we just clean up this channel, cleaning up the bank's balance sheet, deliver corporates, I think we can go back to growth normally. Not fully to all the capacity that Slovenia can do, because more needs to be done also in other areas, but this is like the key thing we need to do first. The second thing we need to do as well is to balance fiscal position. During the years of crisis, the last 5 years, the public deficit went up. The public debt went from 20-25% level to 73% end of last year, with almost no impact on growth. So the thing is that now we need to rebalance the fiscal position. We need to find the way how to put debt back to the normal size, because the burden of this debt and the relatively high interest rates that we have on refinancing of our debt, it's basically killing an economy not only on a short term, but also on a longer term. So we need to deleverage not only private sector, but also the public sector in the second step. And then the third element is that we have a very rigid ownership structure. There is a lot of companies in the state ownership, so we need to put in place a separate management of and improved management of state-owned companies, the state sovereign holding. We need to do some privatization. We have already started the process, and we need to make a long-term goals of how to do the privatization. So these are the three pillars that basically we need to that I spend most of my time. And in order to be able to implement this, we need to have a political stability. We need to have a sufficiently strong coalition to be able first to take decisions, and second to implement it. The political stability, it's not goal per se. And having a coalition, it's not a target per se. It's just an instrument how to achieve all the things we need to achieve in the economy so that people can live better. So this is the last thing, the limitation that we need to have all the time, being able to make decisions, being able to implement them, and not just any decision, the right decision. So maybe if I just go the pillars one by one into some more details, not too much because I would bother you, but nevertheless. So first, the cleaning up of the bank's balance sheet. On the cleaning up of the bank's balance sheet, and maybe just a step before, it's when we sequence different policies and when we look the monetary parts of the cleaning bank's balance sheet and restructuring corporates, and the fiscal side, it's very important that we have a proper sequencing of the things. We need to, the normal policy stance and normal policy mix in Europe is that you have a very relaxed monetary policy, low interest rates, abundance of credit if possible, and a very tight fiscal policy so that you can put the debt and the deficit to a lower figures. If you have the two policies together on a more restrictive stance, it means that you're breaking the growth before really starting and being able to consolidate. So the sequencing is that you first need to do the monetary part. And when we last, if you don't do that, what happens? You just lay off people, you put them on the labor market, but you don't have a private sector to absorb these people from the labor market. So you need to make your private sector start functioning, working before you can really start going very hard and very much more aggressive on the public sector. So how to get to the better environment on interest rates? Cleaning up the bank's balance sheet last year, the ambition was that we would basically recapitalize banks, transfer the bad loans from banks to the bad bank already before June. That was one of my key problems and concerns, that the process has delayed for about 2 quarters because we had to do the stress test. And 2 quarters delaying this process, it means that 2 quarters later we have prospect of growth, and there are 2 quarters of heightened level of fiscal instability. One of my issues that I had during the summer was because we first decided, that was basically more August, September, because we decided to clean up 2 banks, ProBanka and Factor Banka, in a wind down process without having the rest of the banks recapitalized. It means that we had a big risk that we could have a random banks or something like this. It would be much better to have otherwise around, first cleaning up the banks, recapitalizing, and then you can much easily and with much more relaxed way clean up also the smaller banks. But we didn't have much of the choice because we have this stress test to put in place. Finally, we got it with 2 quarters of delay of what we initially thought. And we transferred the assets. We put a substantial amount of capital into the banks, about 3 billion in the first 3 banks. We put the backstop of the rest of the banks that are looking for the private solution, and if they don't find a private solution, we will shore up with the capital ourselves. That are much lower amounts of money needed for that, if that would be the case. And we need to we transfer for about 1.6 billion euros of transfer value of NPLs of a face value of 4.6 billion euro to the bad bank. That was a huge transaction that basically make banks in a position that they can start going to the markets, start borrowing step by step, and start basically lending and functioning normally. And that's something that we basically enable the banks to be ready to start lending. But the things are not that simple, because the banks cannot really start lending unless the corporates are not able to receive loans. Because if we would just start to relent to the corporates, the over-indebted, we would just create another hole, could be another 3 billion euros. So we need to do this intermediate step first and being very, very quick in restructuring corporates. And this is the focus that what we are doing right now. In restructuring corporates, we have done 3 things in December, 3 success factors that can make this process successful. First, the bad bank. We have transferred the assets from banks to the bad bank in a large amount on a large discount. The average discount is around 1/3 of the face value. Additionally, we have recapitalized the bad bank with 200 million euros. This means that the bad bank has the financial strength and capacity to restructure loans. They can afford it to do it. And we have recapitalized the 3 largest banks sufficiently. They have capacity to restructure the NPLs that remained within the banks. So we have the financial capacity to do it. The second thing that we have done, we have staffed the bad bank with the people who has knowledge, experience, skills, that independence, that they can basically restructure the corporates. Restructuring the corporate means that existing shareholders in most of the cases loses. That banks or bad bank after converting debt to equity loses, and that basically we can put it to the level that corporate can normally start borrowing for the new products without really having concern how to repay the all outstanding debt. That's the second part that's really important. The third element that we put in place in December, it's the new restructuring law. In Slovenia, we didn't have kind of out of the court restructuring law style of Chapter 11, when you have quite well defined law and rules how to restructure one corporate without putting it into the solvency procedures. And in the second thing, we had insolvency law, but the power and protection of shareholders in respect to the protection of debt holders was in profit in the shareholders. So we didn't have a legal lever in Slovenia, neither government, neither private sector, that you could force shareholders that they have lost everything, that they have a negative equity, to recognize it. You could not force them to call a general assembly, to put on agenda that they get diluted, that they get written off. And normally the only thing you can do to really restructure law is to put it into the insolvency procedure, which is sometimes detrimental to the growth. So in December, what we did in autumn, we asked EBRD and IMF to give us a technical assistance in preparing a modern insolvency law that includes both the provisions for the out-of-court restructuring on one side, and we have rebalanced the power between shareholders and debt holders so that this process can be done normally. And as you know, some corporates have already applied this new law already end of the last year and start executing it. We didn't have any result yet, but basically we are monitoring how this law is happening, if we need to do some upgrade, but it's absolutely necessary to have something like this in order to be able to restructure. So by having all these 3 elements, we have sufficient success factors that you can really start restructuring corporates very, very quickly. And this is now, I think, the key thing to monitor: how many corporates from the bad bank, from the commercial banks have been restructured, and how completely have been restructured. Because during the last 5 years, we have seen several standstills, we have seen several restructuring, but none of them was really to the way that the corporate was put in a position that they can really normally borrow and start functioning. It was just the way to give them another 6 months, another year of breathing space, but not really profoundly restructure their balance sheet. These 2 things are key. If we fail in restructuring, I think we fail also in cleaning up the bank's balance sheet. So we didn't finish with this exercise. We just did the first step. We engaged a lot of money, and in order to make this money, to justify the usage of this money, we need to make through the banks and through the bad banks that this money goes from the banks to the corporates, to restructuring, not to giving new loans to over-indebted companies. And this is the key thing that basically we need to have in mind when we talk about what banks are doing and what banks are basically not doing. The exercise usually takes some time. It cannot be immediate. It's still a legal processes behind. But in a 6 month, you need to have results. Not everything done, but we need to see a significant amount of things happening during the first 6 months of this year, so that we can do the rest normally in the next 6 months. And the growth will come. Because if you look at the growth figures, the export, the industrial production, we see that things are picking up. In many sectors are performing well. If you look which sectors and which corporates in particular sectors are still over-indebted, which ones still cannot function normally, which ones still cannot invest, go for the new market and so on, you will see that we can add up to this growth quite significant upside in the next year. We just need to deliver. So that's maybe one pillar that it's, I think, really crucial and need to happen as quick as possible. By doing this, we will see that interest rates will go down. We have seen first drop of interest rates in Slovenian deposit market, because you first need to see the drop in deposit market, then you can really expect that this would be reflected also in the banking lending market. Already when the two banks were taking to the wind down procedure, so there were a first drop. The second drop of interest was happening after we have done recapitalization, but this process needs to basically get to the normal process. We have seen that the interest rates on deposits up to 1 year about the same level as the euro area deposit rates. We still see that deposits in the the deposit interest rates on the deposits for more than 1 year, about 100 bips higher than in the euro area. So there is still room for improvement in this particular. And we see that liquidity of the banking sector is sufficient. Maybe I should notice that when last year we did the borrowing in April, May, we put all the money that we didn't use immediately in the budget, that was most of it, into the banking sector. When we borrowed in November, we put our money into the Bank of Slovenia accounts. Liquidity was sufficient in the banking sector, so we didn't need to put it into the banking sector. We put it at the Bank of Slovenia. So the banks are sufficiently liquid, and even now when we borrowed recently, 2 days ago, when we will receive the money, I don't think there is a need to put it within Slovenian domestic banks, because we will just get it back through the treasury bills, otherwise, because there is sufficient liquidity in the market. We just need to basically deploy it properly in the system. And now when deposit rates are moving down and are getting slowly but steadily to the right levels, banks will also start pushing down the credit rates for corporates. The risk perception need to change. And the risk perception will change when corporates get delevered. So we always get back to the leveraging of the corporates. Okay, that's so much for the monetary side. The second thing is a fiscal consolidation path. I would basically mention three points. First is the deficit that we have and the budget for 14 and year 2014 and 15, the fiscal rule and the public debt. And we had approved the budget for 14-15. Most of the measures have been already adopted. What we still need to do for the budget of 2015, it's to make agreement with the syndicates, labor union, for the wage cut and the layoffs in the public sector for 2015. In 2013, when we have discussed this, we have agreed for the 2013-14, and we have agreed that we will rediscuss this in 2014. So this is something that is still waiting for us to do. And then I think what we need to do, because since I'm here, I have never seen a good surprise. I have always seen bad surprise. So we need to have some contingency measures, what we can deploy if we see that things doesn't go the way we really expect. So I think we need to prepare measures, and this is started to do now, in amount something between 200 to 300 million euros. if something goes wrong, so we can just have it in the pocket, we can just deploy it. Because I'm sure we're going to need something, because there always goes something wrong. So that's for 2014, 2015. The deficit go from 4.3 last year, if you take away the one-offs for the banks, to 3.2 this year, and 2.5 next year. So this is quite a significant tightening in this process. And these figures have been prepared on a fairly conservative GDP figures. If you look the GDP forecasts official from UMAR, but also from other institutions, international institutions, just for 2013, but also 14 and 15. In 14 we have minus 0.8 incorporated in our figures, and we have plus 0.4 for 2015. So that's pretty low, especially for 2014. And if you look for 2013, we have seen that the official forecasts are minus 2.4. If you look the growth quarterly, we see that we have a really bad first quarter last year, minus 0.6. The second quarter was not that bad, was minus 0.1. So a negative, but not extremely negative. The third quarter was 0, and nothing particularly bad happening in the fourth quarter. We'll get figures end of February, but nothing such happened that one could expect a very, very negative figures. So putting these things together, I don't think we will get to more than minus 1 or minus. So I think we will get a pretty reasonable figures. So we have seen we can expect some things happening in the GDP figures as well. If you look how this GDP is happening and how this impact the income of the budget, we have seen that we have better outcome in the VAT, because we have done first because we have raised VAT tax in the summer, but also because we have done quite a lot of effort in fighting the grey economy. So the VAT it's outperforming even what we have expected as a raise of the tax. What we see that where we are underperforming in the income, it's the income tax and contribution to social funds. So we have seen that there have been done a lot of layoffs in the economy. We have seen that wages are being more reduced and more contained in the last year. So this also the income in the budget, it's basically to the lower amount. And this is, I think, quite a good warning that if you would balance fiscal and monetary policy differently, putting more fiscal tightening, laying off more people in the public sector and shrinking more the public sector quicker than basically releasing the monetary part, I think we could just get in the spiral when we would get like less income, so you need to do more cuts. So the balancing it and the sequencing, it's really, really important. But this does not mean that we don't have to do it. We will have to do it, and I think we will have to do some really structural measures in the medium term in the public sector. I see on one side the pensions. Whenever I mention it, there's always an issue. But I think sooner or later we will have to touch it, including the pension reform. We will have to touch the cost of the public sector and the size, including the number of employees that you have in public sector. We will have to touch the municipalities in the public sector, and we will need to review everything what it's subsidies and transfer to the households and different. And there's one more thing that I see now, because I'm temporarily replacing the Minister of Economic Affairs. We will really need to overhaul completely the way how we use the European money, because this is so inefficiently used that it's really incredible. I mean, you need to look it from the close to really see that things are really used unproductive. And this is even more important because when we're going to do the fiscal consolidation over the long term of period, so going to zero structural deficit as required by the fiscal rule, the only money that state will have for investment will be the money that will go to European budget. So the money that we will basically transfer to the Europe, and we will get it back as European funds. So these are our money. This is not money that we get from the Europe that we can just spend it whatever we spend it because it's free. And this is the only money that we will be able to use it productively for investment, public investment in this case. And it's limited, and we need to use it the way that has the highest possible multiplicator. the best efficiently use, we need to have much more focused to the way how we use this money. And we will need to measure the impact of this money on a much better thing better way that we are doing now. And we are now in a good position because it's just now when in the next few months when the new cohesion for Europe is preparing, and where we need to define most of the thing how to deploy these sources. One of the key weaknesses that Slovenia has, it doesn't really dare to say what are the priorities. There's so many interest groups pressuring everything wants to be priority that nobody really dares to prioritize. It's easy to say what's strategic, but it's very difficult in Slovenia to say what is not strategic. And saying what is not strategic, it's the way to get to the right outcome of the thing. Just one more thing on the fiscal side before I move forward. It's about the debt. The debt moved, I mentioned, quite quickly up. If we look the way how things are structured, what fiscal deficit we can expect, what GDP growth we can expect, and not taking account the privatization and the bad bank wind down, because the bad bank it's incorporated in our public debt figures, we got to 73% end of the last year of the GDP. And we can expect the GDP, the debt figure will pick up in the next 2 to 3 years on the level something between 80 to 83%. And that's a very high level. Of course, if you look the European Union average, it's 93, and looks it's even higher, so who cares? But you need to look the way how they finance their public debt. They have much more wealth domestically. So Italy finances 70% of its debt domestically. We finance something about 30%. And when we have some interruptions in the international markets, we can be temporarily cut off the markets. We have an issue. If the rates go up, we have an issue. It's not the issue that you cannot overcome, but we are getting dependent on the international markets much more than we were used in the past, and much more that we would like to be. So we need to do a very comprehensive plan how to reduce the public debt. There are two ways how to reduce public debt. One is with the one-off effects. So this is like you take some of your wealth and you sell it. Privatization is part of that. You need to do it wisely, so not to sell it too cheaply. And the second thing, it's the bad bank. The bad bank contributed about 5% of GDP, 5 percentage points of GDP to the debt, and it's programmed to be winded down during the 5 years. Eventually, we can expand it to more. The key thing is that when we do the privatization, when we do the wind down of the bad bank, the proceeds needs to go to reduce the debt, not to current spending on something else. So that's really the imperative that I'm not sure that everybody is fully aware in Slovenia, and that's something that we will have to do. The third thing, the two more things that you can do, it's not like a stock adjustment, it's more like a constant incremental increase or decrease of the debt. It's about the fiscal deficit that we are running. Because even though that every year now we are reducing the fiscal deficit, it's still contributing to the growth. Just in 2014, the deficit projected and in the budget, it's 1 billion euro. So just 1 billion euro add up on the growth. This is the amount of money that we need from external financing of the public sector in order to maintain whatever we do with the public sector. So it's not enough just to go down to reduce the deficit. We need to bring it to zero or even to some surplus, because the interest part of the fiscal spending, it's picking up, because the debt went up so much that we also need to basically save money for the interest, and that's the key thing. So basically, we have upgraded the whole system of management of public debt from the last 5 years in order to be able to basically manage such a high level of debt. Because this means that you are not on the market once, that means that you are on the market at least twice, that you need to do a big issuance, that you need to have more interaction, communication with investors. You need to create a natural demand on their side. And we have done a lot of things during the last 2 years, and I think there are still a lot of things to do in the next 2 to 3 years in order to be efficient in managing of the public debt. And I think the public debt should be now on the after restructuring, the first thing on a long-term basis for having a sustainable growth in Slovenia. The third element I mentioned was the privatization and the management of the state-owned corporates. Maybe I should say it a little bit more general, not just privatization. It's basically all the ownership structures that are changes that are happening in Slovenia, because Slovenia during 2008, 2011, not many transactions happened, not even in the private sector. The ownership structure were blocked. And transactions start to happen in 2012 in the private sector. In 2013, we have started with the list of 15 companies to start privatization, and transaction also will happen on the list of the 15 companies. And the list of 15 companies, we need to deliver. There's no question of delivering or not delivering. We need to deliver. We lose completely our credibility if we don't deliver. We need to improve what will remain state-owned. First, we need to do a strategy, a classification, what we think is strategic and how we're going to manage, and what we think it's not strategic and what we don't need to manage ourselves, that somebody else can own and manage. And if you look what it's owned by the state, you will see a huge list of assets, without taking account the assets that BMC got recently. Already existing direct ownership of the state, it's huge. And there's a lot of small stakes in different companies that it's difficult to explain why it would be necessary to have it owned by the state. So I think this debate that it's forthcoming after the adoption of the state sovereign holding law will be quite interesting. We have decided to do the structure, a top breakdown of assets that are into the sectors. For each sector, we will write a short goals, what we want to achieve in this sector. Not really a strategy, but just something that it's kind of guidelines where we want to have more strategy, when we want to have more competition, when we see some room for the state, when we don't see any room for the state, and then classify the assets in this company, in this sector, into these strategic, relevant, and non-strategic parts. And I'm looking forward to see this debate happening. I don't expect a lot of surprises because there's so much mystification about that. But when you look at the names, when you look at the figures, when you look at the percentage, it's not a big deal. So it's too much noise about something. So I don't expect a big thing there. We'll maybe discuss about one sector. I expect more discussion. It's an energy sector. And we can discuss a little bit about 2 or 3 corporates, but I think that's most of the debate that will be there. And then the next step is about how we're going to manage the assets that will remain in the state ownership. So now we have 3, 4, I don't really know how many asset management companies, so CAT, SOT, PDP, DSU, who are all of them managing one part of the assets. Sometimes they got into the inconsistencies among them. And what we really need to do is to uniform the management of the state sovereign holding. We don't need to transfer and to rebook ownership from one balance sheet to another balance sheet. That's nice to do, but not necessary. But what we really need to do is to centralize decision making, to make one coherent decision making process. And this is what we have now discussion in coalition. Some coalition parties would like to have this separated, have each of their own playground, which I don't think it's very, very productive. And we see how things are going to happen. For me, this is a good testing point where we see how serious do we think with really improving of the management of state-owned companies. If we fail to do this reasonably, we can see that basically we are not meaning it very, very seriously. So that's an important thing to watch in the next month, how the things will come out. And I hope we will be able to get to the centralization game. Okay, I think I said most of the things that I wanted to say on these 3 pillars at probably more than 10 minutes. But I guess some of the question will be out now. Thanks.
Dear guests, welcome also in our name. Matic and I will lead the conversation with our Minister of Finance, Mr. Čufer, today. I would say that you, dear guests, are not surprised when Aisha and Amcham are preparing us surprises with our special guests, and for sure our guest today is a special guest. Minister, you are known in the public as someone who is not really a frequent attendee of such an event, so really thank you very much. I have to say that you surprised me, and probably you also, with your introduction and serving us so many information, so I probably will have to cut a lot of questions which I prepared up front, so thank you very much also for that. But to warm up a little bit this atmosphere, I would like to start with a rather personal question. I've got a 7-year son who said to me today in the morning, "Mom, I'm sick, I have to stay at home." I said, "No, you're not sick." He said, yes, I am. Today are Olympics, we will win a gold medal. How many times would you like to use now, being a Minister of Finance and really like sports? We know that you like sports. How many times would you like to use that kind of excuse in a new position?
I would love to use it every day. Unfortunately, I can't.
Did you have any time now during last few years, few days to watch the Olympics, or you were too occupied with issuing new bonds?
No, I looked a little bit on Olympics, but like twice, 5 minutes during the news, so that's it.
So that's what was important, winning the gold medal, and the gold medal today probably, was it gold? Yes, the gold medal and the medals before. You also have some private questions.
Yeah, of course I do. Good morning, Mr. Minister, and good morning to everybody also. Minister, being a triathlon athlete requires, besides others, also lots of stamina and stubbornness. Does this help you dealing with your everyday challenges? Or do you feel there are any other qualities coming from your sport that help you get up every day?
Okay, I didn't expect so much private questions.
You covered pretty much everything about the rest, so.
Okay. So we can change the topic.
I hope it's going to be the last one, but no, but maybe just one thing regarding sport, that if you, the sports and business or professional things, whatever you put it, it's depends whether you are goal-oriented or not. And if you're goal-oriented, you really do everything that basically will reach that goal. And there's something that it's very similar in both. It's the performance measurement. It's basically the same process. The way how you train to achieve your goal, how you do the goal setting, how you basically watch your intermediate results. There is no difference between sport, between preparing a plan for a bank or for a budget. It's the same thing. It's maybe different terms, but it's exactly the same thing. In politics, you need to ask several different interests in order to implement it. That makes things different, because I don't think Tina Maze really made a referendum on how to train or something. She did what she thinks is best. This is something as finance minister you can't do. You need to consult yourself with other ministers, with coalition parties, and that basically sometimes means that your goal is not such as you would like to have, and then instruments you can use and technique you can use it not the way that you would like to have. So I think you get to the suboptimal level of what you can get out. In that respect, the sport is easier because you can do it yourself. Yes, I'm not sure about the team sports. I'm more individual sports.
I just wanted to say you probably moved out of the individual sports into the team sport. We will not bother you with the private questions anymore. But we don't also have so much time. So we will be we will be a little bit selfish and we'll try to ask as many questions as possible, and at the end we will also give you an opportunity to ask if something will remain unanswered. I would like to start with privatization.
Yes.
I've got a question here. You mentioned that we are having a list of 15 companies and this list has to be delivered. Did I understand you correctly that we will add some state-owned entities to this list, and as if I understood you correctly, probably energetic sector is not something what really will be added to the list, but maybe the insurance companies, then we're having infrastructural companies like DARS?
Okay. When we were designing the policy in last year in April, May, the idea is that we wanted to have a comprehensive things what we want to do, the big picture. But we know that the process to get the big pictures takes some time, especially because you need to consult with so many parties. And there were two things that needed to be done. First, it's to decide how to manage this asset. So this is it's about the law on the state sovereign holding. So the rules and procedure and responsibilities, how basically institutionally this works. The second thing is to classify the assets, and also to classify the assets into the strategy takes some time. And we know that we were expecting to have this done by September. We are now in March, so we are basically quite delayed. And we said, okay, but if you say we will do this in the next 7-8 months, that's not very credible, because you can expect some delays, you're not sure what will happen, you need to start delivering quick. So we said, okay, let's do a shortcut, and let's just take a list of 5 companies and just put it into the parliament, get approval, and start working on it. Because there are some things that are quite an easy decision on what we wanted to do. When we start working on 5 companies, just got inflated to 15 companies. So we end up with a list of 15 companies. We put them into the parliament, we got an approval, but we also got a message from the parliament, don't come with the second list. Mm-hmm. Just come with the whole picture, because the decision of what is strategic, what is not strategic, should be done by the parliament, and it's good to be done it like on coherent way. So we are not going to come with the second list. We are going to come with the whole strategy. Normally it should be done by September. And the state sovereign holding law by June last year. So both are postponing, has been postponed. Luckily, the 15 companies list is basically taking all the resources of the SOT to basically implement it. So even if you put 5 more companies or 10 more companies, I don't think they would be able to run all the process in the parallel. So it's a small institution, it has limited capacity, so we are not wasting our time in that respect. And if we leave some more time that everybody gets comfort with this process, it's fine as well, because then the decisions are more easily adopted. But this discussion will come out, I think, in March, just after the adoption of the state sovereign holding law. We have already prepared the first draft. We have not yet circulated them, and as soon as we have this approval in the parliament of the law, we would like to make the debate as public as possible, as wide as possible, not only including the coalition partners, also opposition partners. We have, I have basically promised this already in June, July, and at that time I think we can really set up what is on the list, what is not the list, and what's the rationale behind.
Why is it taking so long for the law to be adopted?
The first thing was that it was a more difficult piece than I thought. And there was, if you look the last year, we have done so many things in parallel, we just didn't have enough resources to do everything in parallel the way we wanted to do it. It's not the only thing that it's postponed because of lack of resources. Also, if you look the implementation law on the fiscal rule, it's basically postponed to this year. We just don't have enough people to work on all the fronts in parallel. That's one thing. And we have prepared not the first draft in June, but in September. We spent the summer on that issues. And then discussion took quite much longer than expected. And then we have some issues in how the parliament is organized, that we couldn't put it into the December session, and it got in January, it was out. And then February, we don't have a session, and it's only regular session in March. So it's a lot of strange procedural things that are basically postponing the whole process, that are basically detrimental to the process itself.
But now we could expect first law and then the strategy.
Yes, basically the law gives the legal background for such a strategy. You cannot adopt the strategy before because it doesn't have any place to be, doesn't have any legal value at that moment.
Thank you.
Okay. The next topic that we wanted to cover was a bit of a tax environment. 2 months ago, my company joined an international network of executive search consultants. We are part of the CE region, and on our first meeting, we talked about a list of regionally important clients, region being from Russia down to Bulgaria. On that list was 160 companies. Only 12 of them were present in Slovenia. So my question immediately, of course, was, can we still, or do we still have the time to attract some to come to Slovenia? Do we have the environment, meaning tax environment, meaning bureaucracy, that they would be attracted to come to Slovenia? Can we get some that we know left the country to come back? And of course, taxation and tax environment is one of the most important matters in this state. What is your take on that?
Okay, that's more the question on FDI than on tax it itself. Okay. If I put it broadly, the way how I see things is that first FDI side, I don't think taxation is the key issue, because not the level of the taxation, maybe in the part of the personal income tax, because this is where our taxation is done the way that it's not very attractive. But on the side of the corporate tax and this respect, I think the taxation is pretty attractive. The negative part of the transaction is of the taxation is that we have changed during the last 3 years taxation so often that by changes itself we have created an unstable tax environment. That everybody expected that we are going to change the section for the next 3 years, every year, twice as well. So that's why we have decided to commit on tax stabilization, so that we are not going to change taxes when we need to go further for that. If you look at the tax system itself, it needs to be consolidated in one moment of time. I don't think this is the priority at this moment, but in 2 years of time, I think we will have to really see how the whole process is done. Even if you say we would like to keep the same level of taxes as the income to the budget, I think the structure is done the way that it's not very attractive. We have putting too much debt on the labor side of the taxes, not enough eventually on the wealth. And if you look what decision we have done last year in the tax area, basically we have introduced the VAT tax, which is pretty stable, and it's basically export stimulating tax. We didn't introduce the crisis tax, which is basically a labor tax on the labor costs, which would be very detrimental for the productivity and for the competitiveness of the country. And we have introduced the real estate tax, which is the wealth tax. So in the structure, we have changed the structure of the taxation of income the way that it's more stable and more robust to the crisis, so that it doesn't really fluctuate as much as that. So I think we have done strategically or structurally shift into the good direction. But if you look like within each particular tax, the way how you have your tax bracket something, it's quite stimulating for that. So on one side we are saying yes, we wanted to have like a high value added companies producing a high value added growth, but this is the labor that we are taxing the most. So that's quite discouraging on this respect. This will need to happen at one moment of time. I don't think it's priority at this moment, but that's it. If I go back to the FDI for the other elements, I think the key problem for the FDI is that country per se it's attractive. There are investors who are willing to come. They are expressing interest, but our absorption power, it's so low that we chase them away. If somebody comes to Slovenia and said, I have the money, I have the project, I have the business, I would like to build a plant in a 2 months time. Just give me the place where I would like to, where I can basically build a plant. I think the response would be, well, you need 2 years to get the permissions. And I think this is the key element, because why somebody would wait and start engaging themselves in something that takes 2 years, if in a country just across the border he can get this in a 2 months. I think this is the key element that. And if you look the impulses of growth, the first impulse of growth in Slovenia can come from the leveraging corporates. The second can come from privatization. The third should come from the FDIs. So in the period from that we have in the next year, we need to prepare the infrastructure the way that we have the absorption power to have ready to use places when we can really adopt it. If you want to come 2 months, here you can basically build the plant. Here, this is environment that you have a labor force around available with such a skills, and I think that's the key element. I think taxation, the administration barriers, other than like establishing corporates, are not very much relevant. Logistics are quite good in Slovenia. So you have all elements. Just our attitude toward this environmental, regional stuff, it's really determined.
Okay.
It seems that we are again about time. Privatization will take probably some time. The sale of the MPLs will again take some time, and then it's also these bureaucracy obstacles will again take some time. Do we have time? Is it really okay? Privatization and sale of the MPLs, it's quite understandable. It cannot be done for a good price really quickly. But those internal things, do we really need so time to do things which we know that are not functioning? Or it's not a priority?
No, the key thing is that it's not about time. It's that I think we are doing a lot of things, but you just can't do everything at the same time. You just need to sequencing them. You need to set up priorities. If you don't set up priorities, then you're just like, the way how we use the European funds, just showering the economy with that. And with too much priorities, you can't achieve everything. So you need to prioritize. And do we have time? No, we didn't have time already 5 or 10 years ago. So the question is, how quickly can we move, and what priorities do we do first?
I'll have to jump a little bit on the banking sector. Now we are starting the second round of the stress tests. We finished the first one, and the second one will just begin. Could we expect any surprises after this second round? Again, an unexpected number of MPLs?
No, I am not expecting any surprise from the second round. That it's basically going to be run by ECB. In our scope of the stress test, we have included 10 companies. They have been selected by the Bank of Slovenia by some criteria on the quality of the portfolio, on the capital available, and so on. Out of these 10 companies, 2 went in the wind down process, and the 8 were basically run through the end. And the ECB, it's having in their sample 3 companies, 3 banks. There is NLB and NKB are overlapping, so they're in the both sample. And additionally, they put seed into the sample that were not in the sample, existing sample. For the 2 banks that were already in the process, I don't expect anything because the stress tests we have performed are done with the same company, with the same methodology. I think the assumptions are going to be similar, if not our slightly more conservative. So I don't expect anything coming up from that side. On the seed side, if you look at it, it has a very particular balance sheet with a very strong capital adequacy, and I don't expect anything coming out of there. Otherwise, already the indicators used by banks of Slovenia would include them into the first sample anyway. So I think I don't expect anything from that side.
But in Slovenia, we could expect probably in this year or maybe in the near future cutting down the numbers of banks, the number of banks generally in the banking sector.
Yes, what we can expect, it's basically consolidation of the banking sector. It's not clear exactly how things it's going to happen because it's to a large degree depending on the market, on the interest. What we have done during the process of cleaning up the banks, getting permission from the European Commission to be allowed to recapitalize, it's that we have also committed to privatize NKBM to 100%. We have committed ourselves to privatize NLB up to 75%. And Abanka, it's not yet fully finished the process, but something similar can happen, can be expected as well. So basically, that's, I think, sufficient amount of commitment that go into the direction of merging and consolidation of the banking sector, definitely.
Okay, thank you.
I wanted to ask about the timeline for the bad bank. First, initially, it was said 5 years, right? Then in one of our business breakfasts here, it was mentioned that it could go to 10 to 12, 13 years. How do you see the efficiency? Like, what can be done in 12 that cannot really be done in 5?
The bad bank provisions in the law for the bad bank is that it's need to be closed in 5 years' time. So given that half of the year or more than half of almost a year it's already over, it's 4 years left. That's a short period of time to wind down 4.6 billion euro of assets. So there are three things in the law that basically bothers me from this respect. It's first that it is by the law that it needs to be owned 100% by the state. That means that we are consolidating them into the public debt. If you look the Spanish and the Irish case, the state only own 49%. The rest is owned by the banks, and that's enough to deconsolidate it. So that would only this accounting exercise reduce the public debt for 5% of GDP. And we have seen that there have been some interest from various investors about getting stake in ownership structure of bad bank. I think it's too early to do it in the first phase because the risks are not visible. We don't know what would be the right value of the assets after being turned around and start that. But in the second phase of the bad bank, I think we can think about having a private investor also in the shareholding structure. The second thing, they have two provisions. It's about 5 years. The second, that they are obliged by the law to divest 10% of their asset every year. So that puts them in a situation that they might be obliged to sell assets even if the price is not right or the assets that they are selling are not properly transformed. So that's a little bit too short. And this is something that the 10% we would like to abolish it and to give more room, so 10, 15 depends already by the law, that they have more time to wind down. So these are important things. But one more thing I would like to say is that the assets that are transferred to the bad bank, there are two phases. First phase is that they get claims to the corporates, they need to get restructured. They need to restructure corporates very, very quickly. So this is 6 months to 1 year. The second thing is when that claims are transformed, that corporates are deleveraged to find the proper partners to divest these things. So one part of the exercise needs to be done very quickly. The second part of the exercise can take some more time.